Another day in crypto and another day of extreme fear. Bitcoin is struggling to close above key support levels. And it's led me to this quote that I remember dearly on a daily basis for the markets from our friend Jesse Livermore, early 1900s trader, absolute legend in the game. The stock markets, or in our case, markets in general, crypto, Bitcoin, are never obvious. It is designed to fool most of the people most of the time. And so I can take this a couple of ways, and that's what I want to share with you in today's video as we look at some of the recession indicators that have been flashing, some of them which are broken, and also recap where cryptocurrency currently sits, some well and truly below key support levels. But I haven't given up on the bull market yet. The data is still not suggesting it is time to give up on the bull market. It is just here to fool most of us most of the time, including myself. There's only so much that we can do here in the markets at the end of the day. We are human. So with that said, let's click some like buttons, subscribe to the channel if you're new here. It's your home of macro cycle analysis. We're covering Bitcoin, cryptos, the stock markets, and the real estate cycle. All right, kicking it off with the real estate cycle here. Winner's curse phase. You guys should know it by now. This is where we are at. This is what we are in. And within this cycle, it's probably important to remember now, the volatility. The volatility gets even more extreme because you see prices go up higher. The S&P 500, it has moved quite a lot from 2022 into 2023 and now 2024. And so you start to see a lot of these extreme moves happen. The NASDAQ, same thing here, moving up really high, big pullbacks, enough to fool most of the people most of the time. And because the stock markets are never obvious. So that's what I'm seeing with this winner's curse phase. This is the 18.6 year cycle. This has not changed. This has been around for over 200 years. We're looking to some sort of real estate and economic top around these dates here. The stock market might run longer. Crypto will have its cycle within these years as well. So this is still on. You're still seeing signs of that. And I think this is a very good example of the winner's curse phase, as the prices just kept going up. And then when you do see corrections, they can become quite volatile. So with that in mind, looking at the sentiment cycle, we've obviously just seen panic, and I think we're still in this type of panic stage of the market. But prior to that, there was a lot of enthusiasm, whether you're talking the stock market, Bitcoin, or cryptos. Just looking back 6 months ago now, going back to February and March of 2023, at least for Bitcoin and cryptos, markets were up, tons of enthusiasm. You had calls for $1.5 million Bitcoin from you know who, and everyone in between looking for $100,000 Bitcoin. But there's always going to be some sort of panic after that. And I did not pick that Bitcoin would go to $49,000. I don't even pick where Bitcoin is going to go to the upside. I have no idea. I don't try to do price predictions. I really don't like price predictions. I prefer looking at things more from a time perspective. How much time has the market gone up for? How much time has it come down for? And then assess where the price is at. So we saw it go up for 6 months after breaking out of a nearly 7-month accumulation, and now the market, in this case Bitcoin, has been down into its 5th month. So still some time here to go should the price continue to range trade between your $50,000 and $70,000 over the next 1 to 2 months. So if you're familiar with the Wall Street cheat sheet, you know we go in these sorts of stages through the market cycle. Somewhere around this hope was that move to the upside. Now we're obviously seeing a pretty significant disbelief in the rally that we've just experienced into that peak of March. And then you'd get this on a smaller time frame as well as the larger time frame. So you'd probably have to go through some sort of anger and depression, which is similar to this discouragement. You know, prices are going nowhere. There's nothing going on here. Basically, it's all going to collapse and crash. Although all of that is still true, the charts still haven't broken down to the point where that could be true. And of course, we've got that to go through on the analysis as well with price support on the macro time frame. The stock market still haven't broken down to any levels that I would consider the massive macro bull market over. What I'm seeing happen at the moment is a lot of uncertainty, a lot of doubt, a lot of fear. not that people are trying to ram this down others' throats, although it does often feel like that. I think we are going through some sort of cycle like this. There's been a lot of returned confidence, then enthusiasm into the peaks, and of course, panic that we've just experienced now. And to exacerbate that feeling is the summertime lull. So you may have seen us look at this before. I think it's important to recap the seasonal patterns that come in year after year after year, especially around this summertime period for the stock markets where the volume tends to drop off. So if you don't have the liquidity there and you've got a lot of bad stories for the market, a lot of bad narratives, coupled with that lack of liquidity here, well, then that's just a recipe for the markets to crash even further. Of course, we've seen that with the Fear and Greed Index. It's down at 20. Checking out the timeline here, it hasn't been this low for a long time now. If we went back to the October lows of 2023, even in those times, it was only sitting around 20. So the last few days was at 16, 24, now back to 20. An interesting point to know about this is the time that the correction lasted for and around that same period, which I'll get to in just a moment. But I want to give you the broken recession indicator, or in the case of the SARM indicator that Claudia Sahm put together, the words out of her mouth are that the recession indicator is meant to be broken. My recession rule was meant to be broken. So in saying that it's a broken indicator, I think highlights a better point that all of these models are meant to be broken. There is no such thing as a 100% hit rate in any tool. And from her mouth herself in this particular article here on Bloomberg, Claudia Sahm is the chief economist at New Century Advisors and a former Federal Reserve economist. She is the creator of the SARM rule. If we go through this entire article, she's quite neutral to bullish on the economic data coming out of the US. And so even though the indicator she put together has flashed a recession signal, she is still very much open to the fact that it could be wrong this time. But in the case of it being wrong, it just gives more data to her rule, and then you can start to input that data to give a better recession indicator in the future. So I love to see this from particular rules that everyone has been quoting lately, showing that, well, the recession is only months away. That could be the case. It could be the case. But like we've looked at over the last 12 months ourselves, is that even with countries and economies falling into recession, they were still pushing to new all-time highs. Germany was a classic example of being in a technical recession and still the stock market going into new all-time highs. So just remember what you're trading here. You're trading the call of a recession, or are you trading the markets and where the price is going? And in this case, maybe the price for the stock markets, US stock markets, goes down into some sort of recession, or maybe into an interest rate cut, and then reverses from that point. And typically what investors are looking for are the price to go down, then the news to get bad or worse, or just hear bad news again, and then they expect further downside, and the market might not give them that extra opportunity. Remember, the markets, like we said in the intro, the stock market is never obvious. It is designed to fool most of the people most of the time. So all I'm getting at here with this recession call or interest rate cuts that might actually come, as we can see here, we've been looking at this all year. There's been no cuts all year, as we've been talking about. Eventually, you're going to get a group of this data that comes together. Obviously, the stock markets are down. I mean, the economy is not doing as bad. It's not putting in as higher numbers as it has done in the past, but it is still growing, as she states here. The economy is growing less quickly, but it's still growing. So you might not get this double interest rate cut. So anyway, well, the point I'm trying to make here is, even though people think these are all these bad news items coming out, and they'll come out on those days, they might see the stock market go in the opposite direction. So maybe you get the cut. Maybe the recession is called for, and then the market goes in the opposite direction. The market is never obvious, designed to fool most of the people most of the time. I like to follow the charts. That's what we are looking at right now. So to the downside, any of this technical areas of breakdown, we're looking at monthly swing bottoms, we're looking at previous all-time highs, and we're looking at the 50% level here. Those prices, as they have stayed for months now, somewhere around 4,800 to 5,000 points. Very worst case scenario, spikes, but you definitely want closes above about that 4,800 points. Spikes down to 46 is still in this 50%. Whoop, this 50% right here. Okay, so that's still all okay for the stock market. For the NASDAQ, similar sort of thing here. It's on the 50% level now. To the downside, you've got 16,500, and to the 50% level, spikes, you definitely don't want any closes below here, is down to 15,700. Now I've got a comment, another dip after a rally. Maybe we've just seen that particular rally. Maybe we get a slightly larger one here that comes up to test the underside at roughly 19,000 points, maybe 18.8. And then we get this fade off again. That's going to be an interesting one to follow over the next few weeks, because the previous corrections of significant importance are typically at least 3 months. Obviously, COVID was 1 to 2 months, but they also show 3 to 4 distinctive corrections as well. So if this one is a quicker one, you can see the velocity of the move was much greater than the bear market we had in 2022. You can see we've had a nice swing down, pretty significant rally, another swing down, another rally, and then the final swing down before a smaller rally, higher low, and then the market puts in another higher low there. At this time, everyone was very, very bearish, but the price action was showing something different. And of course, we covered it here on the channel. So we'll continue to watch out for any sort of 3+ months move to the downside, followed by rallies. And it is typical that it shows up at this time of year, like we saw last year as one easy example. July, fall, then a peak, fall, then another peak, and then that final low into October. So that marries up with this thing here, our summertime trading lull. So that takes us over to Bitcoin cryptos. Extreme fear, 20. That's what we hit again. We're in extreme fear today because Bitcoin also fell. It got rejected and then fell back. So we're still in this extreme fear. We know it can last maybe a month or so. The critical thing now for BTC is to continue to hold key levels. Some of those key levels, this low here at 53,500. It's now attempting 56.5K again, which is great news. It's up 3%. It definitely needs to get back into this zone to consolidate, and ideally above 59.5, which is this range, so low to the high, and then eventually the low to the top. So that's that 50% right through the middle there at $61,500. If it's able to do that and just base itself above $61,500, it's got a lot more strength for the remainder of this bull market. However, we've got to look at the underside. Keep coming back to this. I know maybe I make things obvious, but really it's not obvious at the end of the day for most of the people most of the time. To the downside for those invalidation points, if it continues to fail here in this mid $50,000, then that sets up the traders and the price action to come back and retest these lows back at the low 50,000s, and of course that low there at 49. Now, the last levels of support here are at 44,600 being the 50%. And at the very worst, the ETF low here. This is an important one, at least for my analysis, around $38,500. I know most people don't want to know the absolute worst case scenario for a bull market, but I'm happy to talk about it here. I'm still very bullish. I still want to understand the movements to the downside. You've still got this level at roughly 32K. I'm not saying it's going to get there, but I'm just looking at structure itself. If the structure breaks down from the 50%, but then it's able to hold above $32,000, that would be the worst case for the bull market. Breaking under that 32K, it's over. This was all distribution and it collapses from that point. I've talked a lot about the 50% level, and if the market breaks down from $44,500, it's basically over. And for most, it would feel like it is basically over. Underneath 45K, if it was to range between 32 and 45, it would just take a lot longer to recuperate and come back higher. But when you can look at the price structure, well, it's still a higher low. It's just going to take longer to then push to the upside. That's why for the best case scenario, you definitely don't want to see Bitcoin go underneath $44,500 if it's going to remain on track for a better time frame here to get to those new all-time highs. Fingers crossed, it remains where it is above this 50K and it continues to push higher as it's trying to do now, nearly coming back to $57,000. And hopefully in the next few days, for the absolute best case scenario, we get a close above 56.5 and then a close above the 50% level right through the middle there, which is roughly around 59.5. And then of course, best case here towards the end of August into September, you're going to get closes above $61,500. If that's to occur, you get the closes above there, then probably going to see those new all-time highs within that 180 to 200, 210 days from the previous old all-time high, which puts that time frame out into sort of September, October, November, which also lines up with the election coming in, obviously the first week of November. That analysis is going to be very similar for the total cryptocurrency market cap. This also includes stablecoins, so it's basically absolutely everything. Currently sitting at 1.96 trillion. Nice simple numbers here. The 50% level comes out at 1.72. So below 1.72 equals very weak. It can sit in that zone, and above 1.2 trillion, that would just be a lot longer of a grind out before any movement higher. So ideally above this sort of $1.87 trillion is where you'd want to see the monthly closes end up for the total cryptocurrency market cap to attempt those next legs higher. So how do you use that in your trading plans? Well, end of August, you get some closes above here, then you're still looking at a stronger market. Closes below 1.72, then you're looking at a weaker market, and you'd have to adjust how you play cryptocurrency from that point. So how are we playing the cryptocurrencies? Solana versus Ethereum has broken out into a new all-time high. This is the chart that I was using. You can see it breaking down, which means Solana is getting stronger. So let's just look at the chart that's going up. Solana getting stronger, moving to the upside. What does that look like for the actual price action of ETH? Today, up 4%, pushing to 24.40. The worst cases have occurred over the last 2 days for ETH. You had a close under the 50%, a test of the 50%, and look how damn close it keeps getting. Close under that level, 2487, and then again, another close under that level. One of the saving graces to this very short-term analysis is the volume on the down day was less than the volume on the, in this case, it's an inside day, but it was higher on the top here, and also a higher close. So that's one of the very short-term saving graces here, in the hopes that Ethereum eventually finds a bottom over the next few days to few weeks. Closes above 2487 is the key here, and then all the way back here at these lows. So call it $2,850 for a little round number there. So that's ideally where ETH needs to get to. And the problem that it's having against Solana is that Solana is holding up above major 50% levels. This is the range right here. There is the 50% level through the middle, 109. So it's held up above that, even on the big panic day, and then got above the 50% level of the entire, there it is, bear market range. So it was above that too. And now it's testing this shorter term 50% range. Small rejection yesterday, and right now it is trying to close, well, it's pushing price higher than that, and there's still 22 hours to go. So over the next 22 hours, watch for a close above $152 for Sol, and then eventually 160, which is this entire correction range. So that's the strength there from Solana over Ethereum in a macro structure. You can see it's well and truly above those 50%, where ETH has continued to break down underneath those 50% back into the price zone of where it was at the ETF. So that's ETH and Sol. I've contemplated bringing this one up, but I will for the sake of the XRP folks. XRP is behind my head here. The SEC announcement was on today, and I'm going to relate this to Ethereum as well. How rubbish Ethereum has been performing, and what we'll have to look out for at the end of this cycle. XRP could be giving us some warning signs of how bad things are to come for Ethereum. I'll get to that in just a sec. This is what some people have been getting very excited about. The breakout right down there. If I zoom right in, you can see the breakout here for XRP versus BTC. So a pretty good breakout here. Now, if we zoom out, they usually say zoom, when in doubt, zoom out. But in this case, you never want to zoom out for XRP because, well, zooming out brings on doubt. That's a good one. Use that. The bull market top was back here. That was 2021. The low here was the SEC lawsuit in 2021. So it's basically around those same prices. And then the bull market top way back here in 2017. So it's got a lot of work to do if it's ever to get back to anything like that. Otherwise, absolute waste of time, useless asset to hold. It's just the name of the game. You know, if you've got emotions to it, the money doesn't care about your emotions. So with that in mind, then we have to look at ETH BTC, and it's in a similar sort of movement here, continuing down upon down upon down. This is 2018, 2017 tops, just like XRP, hasn't met those before. 2021, here they are. There's 2022 top as well, but two of those tops there in 2021. You have the bottom here, and now the ETH versus BTC pair has continued to die off. So far, it still hasn't been able to close back above any of these previous lows or break out of any of this downtrend. So ETH BTC, still not great. I hold Ethereum, not having to go at any Ethereum's holders and all that sort of emotional BS that people get drawn to, especially as they get wedded to their coins. I hold a lot of Ethereum. So I'm I'm paying a lot of attention to this chart over this course of the cycle. Should this thing not be able to break out of, at the very least, these tops here, or that 50% level, and get above these tops. That's the important one there. It has to get above 0.086 for this cycle and then consolidate above that level. If it gets above it and breaks back below these levels, I would deem that ETH is another shitcoin that just makes more Bitcoin maxis. I know how much people love to hear that. They love the whole throwing around, you're a Bitcoin maxi, you don't understand other coins. No, I couldn't give a shit. I just want something that is going to make me money longer term. And if it's not going to make me money, well, then it can piss off, right? There's no point in getting emotionally attached to these things. So we're gonna have to wait and see what happens throughout this cycle, but this has been a pretty bad movement here. So the last breakdown point, roughly 3.5% back at these previous lows. We'll keep watching it. That is my dig at ETH and at XRP because I don't care at the end of the day. I just want the assets that I hold to do well and to do better than Bitcoin. Otherwise, there's no point in holding anything else but Bitcoin to make money at the end of the day. That's what it's about. Not here to become Michael Saylor's friend. And on that note, hit the like, subscribe if you haven't already after this half an hour long video, and I'll see you back at the next one. Till then, take care and peace out.